Hello, and welcome to Trestlebridge Capital's Market and Economic Recap. Before we begin, here's a quick note from our legal team. Today's discussion is hosted by Eric Jefferson, Managing Partner of Trestlebridge Capital, as he breaks down this key market updates. Let's get started.
Welcome to the Trestlebridge Capital market call coming to you after the market close on Tuesday, March the 4th. First day, tariffs obviously went live, not surprisingly, have seen some more red on the trading screen. We now have the S&P 500 6% off its all-time high that was achieved in mid-February. That now puts year-to-date performance marginally negative, down 1.5%. Interestingly enough, though, if we look at some of the sentiment indicators for both consumers and investors, we are seeing those at sharply low negative levels, typically corresponding with market pullbacks in the 20 plus range. So with all of that fear out there, did want to offer some perspective as to those data points we're monitoring as it relates to the market and economic environment ahead. First and foremost, tariffs, something that's been on everybody's mind. Want to offer some thought. I think there were many that probably hoped this day would actually never come, expecting that tariffs were more of a negotiating tool. Obviously, that is no longer the case as those have gone live. There's even been some talk of retaliation. More certainly to come down the road, April 2nd being the next key date to watch very closely there. I think now that they are in place, the question really becomes, first, how long will they last? Obviously, every day, companies wait to get some clarity before investing in a new project or launching a new product. That's something that will ever so slightly take a marginal impact on growth. Secondly, a question we won't know for some time, but what are those long-term implications? We've already seen some of those retaliations. At the end of the day, tariffs are inflationary. Tariffs do represent a headwind to growth. The question, though, we think about trade partners, we think about global relations. What impact might that have? Again, unfortunately, only time will tell there. Secondly, and I think probably the bigger concern on most folks' radar is the fear of recession. That word has now made quite a comeback in the last 2 weeks. Handful of data points out there that I think have really contributed to a lot of that. First and foremost, did receive some sharply lower services and retail sales. Retail sales being a measure of consumer spending. Obviously, if people are worried about a recession, they tend to spend less. And we did see one sharply lower data point. Now, keep in mind, one data point, obviously not a trend as well. The colder than expected weather we've received, especially here in the Northeast, but across the country, as well as the wildfires in LA, certainly played some role in that. I think will be very interesting. Certainly something we're monitoring very, very closely as to where that trend goes moving forward. Secondly, the Atlanta Federal Reserve published their GDP forecast. GDP, gross domestic product, is a measure of everything sold by consumers, businesses, the government. And then at the end of the day, that subtracts out imports. Now, that measure, widely accepted to be the size of an economy, obviously one growing versus contracting, generally corresponds with good versus bad. Now, that GDP forecast, so that is a forward-looking data point, not reflective of what has happened. GDP growth has been phenomenal. Granted, that rate of growth has begun to slow, moving more in line with the long-term average of 2%. But forecasts looking forward did turn sharply negative. A lot of that can be explained by the fact, again, we had record imports over the last month or so. Again, a lot of that in anticipation of these tariffs that have now gone live to today. So again, similar to the slowing retail sales, one data point is not a trend, something we are clearly focused on very, very closely. Fortunately, labor data indicates by no means are we in a recession or near one today. Obviously, though, it's more the path or the trend of where that data will lead us down the road that likely will drive markets. Obviously, there is a lot of uncertainty. That's the one point that is obvious today. And as such, do believe some caution is absolutely warranted here. By no means would I say this is an opportunity to be overly aggressive. That being said, certainly wouldn't suggest going for the hills, running completely to cash at some point. Assuming we do get some clarity here, likely to see markets react favorably. And again, last thing you would want to do, lock in any short-term losses and prevent you from participating, assuming that rally then does materialize should macro conditions improve. That's all for now. As always, happy to discuss further. Hope you have a great rest of the day. Take care.